All right. Hey, everyone. Hold on a second here. Let me just move my microphone. All right. Hey, good to see you all. Hold on a second. All right. That should be better. Okay. All right, everyone. Hey, how's it going? Mark here, Mark P Markets. Thanks for joining me for another Bitcoin video analysis. Here I am simulcasting today. I know you guys haven't seen me in a little while. Let me make sure I get my other, I have to get my other slide up here. Here, before we get started, let me just say this. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, so real quick, we have a lot to talk about here, so let's get this thing moving. First off, if you haven't checked out my TradingView article, I published it the other day, and you could read some more information about my views on what I think is going on here. Of course, I see some questions, which I'm going to answer. Also, if you're new to the stream, this is how it works. Basically, first thing I'm going to do is go over the economic calendar very quickly, okay, because I reviewed it before I started the stream here. Then I'm going to go over my Bitcoin analysis. We're going to talk about price action. We're going to talk about some levels and some potential scenarios for the coming week. And then I'm going to answer your questions, okay? So I see quite a few questions in the channel here. Hold on, let me move this over here. Sorry, hold on a second. All right, I got to see what's going on over here in the TradingView side of things. So if you have a question, now would be a good time to put it in the channel. All right, so that once I get to the Q&A portion of the stream here, I can answer your questions, okay? So again, if you have a question about an alt or a stock or whatever, now is a good time to put it in. So let me just say hello to a few people. We've got Wedge. Hey, good to see you, Bill. All right, Eligius, Ben. All right, X, good to see you all. Okay, Alex, my regulars. We got Winter. Okay, Levant, good to see you. Levant, Peter, David. All right, Scott. Hey, good to see you all. All right, cool. So first things first, let's quickly talk about, hold on. Let's talk about the economic calendar. Okay, hold on. There we go. I looked it over. There's only one event that's worth paying attention to this week, and that is the CPI report, which comes out on Wednesday, which is what, the 10th? I believe that number comes out, or that report comes out at 10:30 a.m. Eastern time. Double check on the time. It may not be exactly that time. Double check. Again, the idea, you're not looking for trade ideas. What you're looking for is a surprise, okay? Right now, inflation is an important topic. So CPI is going to be a report on that, basically, right? And if it comes out too high, that's going to be a negative, okay? Because that means the Fed is probably going to continue raising rates or whatever. There's no argument for them to stop. If the number comes in lower than expected, that's a positive for the market, okay? Right now, the market's in a strange situation. We had the jobs report that came out on Friday, and the report came out better, but the market sold off dramatically at the, when the report came out. Why? Again, if you grasp at logic, it's going to be very confusing. But the way the market is interpreting this from a report that I saw is that more jobs is actually supports the argument of inflation for the Fed. So the Fed is more likely to continue to raise, right, in the face of stronger economic data, right? So it's hard to understand, but you have to look at it from the Federal Reserve point of view, right? And that's what the market's reacting to. Also, another thing you have to keep in mind is this environment that we're in right now. This is the height of summertime volume, okay? What I mean by that is there may be some volume here and there, and people like to get all caught up with nonsense statistics. But here's the thing. The ranges on these markets have shrunken, okay? And that's a lack of activity. So the volume, a lot of the volume is likely coming from market makers hedging, which is not the same as new retail traders coming in and putting money to work, or large funds putting money to work, right? So you have to understand this environment and its lack of follow through. It's very important. People are jumping to all kinds of conclusions on nonsense movement, okay? Stop doing that. We're going to talk about that now. So let's talk about Bitcoin here. It's the first thing we're going to get into. Let me say hello to my TradingView people. All right, we got Steve and Freeloader. Okay, Hamza, good to see you all. Yeah, Hamza, thanks for stopping by, you guys. Okay, so yeah, TradingView people, good time to put questions in, just so you know. All right, let's talk about Bitcoin, shall we? So first things first, and I saw a question here in the channel. I'm just going to mention the question real quick because from Ben here, because it's relevant to the analysis that I'm going to do here. He wants to know, oh yeah, by the way, if you want to put what country or what city you're from, that's always a fun fact. I forgot to mention it. Ben from Canada, he says BTC found some support, or it looks like it found some support between 21 and 23K level. Is it safe to go long a full size or a half or less? So basically, is this a good time to start getting involved? Okay. Now here's the thing. My answer is no, and here's why. Here's what you have to look at. Okay. Again, and I pointed this out in my analysis. It's hard for me to explain this because again, everyone gets very focused in on all of this. No, look, higher lows, higher highs. Yes, on the short-term trend, for those of you that know what I'm talking about, the short-term trend is arguably bullish because we do have higher lows and we do have higher highs. Okay. But this is what you cannot lose sight of, and that is the larger picture. The midterm trend and the broader trend has not changed at all, not even a little bit. This is not bullish. Now, on top of that, we have an environment that has not changed. So we still have a Fed that's aiming to be hawkish. Okay, so I don't care about this little nonsense movement in Bitcoin. It's meaningless. Let me say that again. It's meaningless, okay? Unless you're, of course, you're looking at day trades. But we're not talking about day trades here. We're talking about swing trades, or we're talking about investing, right? Larger time frame. So here's the problem. This range here, 22 to 24K, is still the resistance that is in play. So these buy signals, right? I called the short a couple of weeks ago, which again went nowhere, right? I called the short over here publicly here on TradingView. I call the short over here, okay? I don't take shorts, as you know, and I made that clear, but those were sell signals. And I warned that there is a lack of follow through. So you can't really expect much in this environment. And as soon as a conflicting signal appears, you have to do something. This here is a conflicting signal. You shouldn't see an inside bar, a bullish inside bar develop when this thing is trying to work its bearish momentum, okay? And you should not see this type of hesitation. That's a warning if you're short. So as I tell people, that's your cue to adjust, okay? Whether that means tightening your stop, exiting for a small loss, exiting for a small win. If you're not that nimble and you're not willing to accept that, then you have to accept the full risk, okay? And that this thing is getting stopped out basically. The stop on this thing actually was based on, see, the trade idea was based on 23.5 was the price. And I gave it, what, 2,500 pips or 2,500 points, I believe. So it's still technically not stopped out yet, but this is not something you want to see if you are short, okay? So there are times when both sides of the market don't make sense to be involved in. Now, at this point, as the week continues here, you have to understand Bitcoin is linked to the stock market, okay? So if you take a look at the S&P, we'll take a quick look here. It's gone nowhere. It's been struggling between 4,100 and 4,200, okay? Is it any coincidence that Bitcoin is also going nowhere? So that's what you have to keep in mind. And if Bitcoin's not going nowhere, your altcoins are going nowhere, even though temporarily they look like they're doing something. Don't be fooled by this, please. Okay, so here's what I would be considering. Since I don't short Bitcoin, I'd still be looking for shorts, okay? If I were open to shorting it, okay? I don't short it, let's make that clear. But this location up in here, okay, is a selling area. But there's no sell signal at the moment. So if a sell signal appears somewhere, what is this high over here? 24,688. So if a sell signal appears somewhere in these 24s, okay, a sell signal could be a bearish pin bar, for example, that would give you a new reason or a new trade idea to go short for a swing trade if that develops. Now, keep in mind, the CPI report can come out in a way that is bullish for the S&P, and if that's the case, you're going to see this. You're going to see a breakout, okay, most likely. Now, again, that's really more for day trades if you're taking that. The problem with taking the swing trade breakout is you're in an extremely vulnerable area, okay? And this thing can easily fake out inside of this zone, okay? Especially since it's an old support. What is this number over here? 25.3, right? This tail over here. So that can basically act as some kind of resistance area, possibly. So it's very vulnerable. All right. That's why it's a bad idea to go for those breakouts. It's a low probability idea, although it will look good at the moment. You can't get sucked in by what's going on at the moment. You have to pay attention to the bigger picture. Okay. So the bigger picture, again, continues to be bearish, even though we have this bullish structure developing. Now, keep in mind, if the new sell signal develops, okay, and it takes out this low right here, that higher low, 22.9. So basically starts breaking into the 22s, 22.8, 22.5. You start seeing that, then that at that time, okay, only at that time, this structure that I'm pointing out here, this entire structure at that time becomes officially a lower high at that time. But these supports have to break, okay? You can draw a trend line connecting these supports. That needs to break in order for this thing to be confirmed as a bearish structure, or basically a bear market rally type of situation. Does that make sense to you guys? So at this moment, we can argue the momentum is bullish on the short term, but the risk is very high if you try to hold on to it. So that's why day trades make the most sense. You get in, you take something, you get out. You don't go into this thing with high expectations, because look where you're buying it. Okay, this is a really bad area to feel safe or to have very optimistic expectations. Now, also keep in mind, in such an area, you're going to get a lot of talk from people who have no idea what they're talking about, a lot of novices, right? A lot of morons, and they're going to be saying a lot of optimistic things because that's what generates traffic, unlike what I get on my channel, because I talk about reality. No one wants to hear reality. Some of you want to hear it, of course, but most people don't. My numbers suffer, especially in this lower volume environment. That's why I'm only doing this every other Monday. Okay, I have to take a Monday off in between to invest my time in something that's more productive for me, because my numbers stink on TradingView and on YouTube. I know why, and I have to take the time to work on that. Okay. Meanwhile, if I was lying and I was coming out and saying things like Bitcoin's going to 40K, trust me on that. If I was saying stuff like that and I was putting that in my titles, I'm sure I'd get a lot more traffic. Okay. But let's be realistic here. So that's what I'm saying. Very high risk area for new longs. Certainly wouldn't be investing here. Definitely not. No reason to. Okay. Like I always say, when it comes to investing, there's never a bad price, but you have to really be cognizant of this location. This is not a place to be putting on large positions. To answer your question about should you take a full position? No. Okay, small bites only, because you have to account for this risk. If this structure becomes a lower high, okay, meaning you get a double top over here over the following week, which is a potential scenario, you get a lower high and this thing starts breaking, you're looking at a test of these lows. Okay, you have to account for that. Now, again, I can't sit here and tell you that we're going to reach that with any type of certainty. I can't. I know better that that's not possible. Okay, but you can account for the risk, and that is what you should be doing. All right, so it's possible. This 17K area, these lows, and 14K, these ranges are still within play. They're not out of range yet. Okay, like when I say that, when we were back at 50K or we're in the 40Ks, there's no way I'd be talking about 17K or 14K, because those numbers were out of range. Okay, back then the support was 38K and 40K. Well, when those numbers got cleared, then it became 25K and 30K. When those numbers got cleared, right, then we're looking at 20K, 18K, 14K, and those numbers are still the numbers in play. Does that make sense to you guys? Okay, so I mean, that's pretty much my Bitcoin analysis. Let me know if you have questions about that. Let me just go back and take a look at some of the comments here. What happened to my, okay, there we go. Let me just take a look here at what some people said. Oh yeah, people, if you can press the like button on TradingView, I guess boosting is what it's called now. Okay, appreciate that. Thank you. All right, hold on a second here. Let me just All right, my screen got a little messed up. Okay, so you guys with me on that? Okay, yeah, Matt. I appreciate you missed me again. I'm only doing this every other Monday, which means next Monday I am not streaming. Okay, I will be streaming the following Monday, so it's every other Monday. All right, maybe when the environment gets better and I see my numbers go up, I'll change that. But right now, I have to switch to every other Monday. All right, any questions about Bitcoin? You guys clear on that? I prefer to hear reality. Okay, cool. I appreciate that. Well, some people do, but if you want to look at like the average, probably the people that want to hear reality are probably like near the. If you look at a bell curve, they're probably near the extreme part of the bell curve, while everyone else wants to hear lies. They want to be lied to and they want to be filled with hope. Hope is everywhere, right? It's not just in this game, it's everywhere. It's really sad. Okay, but anyway, let me see here. Thanks for the stream. Suggestion, please let us know on your Sunday analysis if you will have a stream on Monday. Oh, okay. Nader, I mentioned, I don't know if I'm allowed to even mention that on TradingView. I don't think I'm allowed, though, it's against the house rules to promote stuff. So if I put on there, oh, I'm going to stream tomorrow, they'll probably give me a hard time. Okay, so you might want to take that up with them. That's why I don't. Otherwise, I would do that. That makes sense. But they have their house rules. So and there's a lot of people that would love to report me on there because I make them look bad all day. All right. So let me see what else we got here. Can you take a quick look? Okay, so I got some questions here. All right, cool. So we're going to go over those. Okay, we'll take a look. So yeah, so again, put your altcoin questions there and all that stuff, and I'm going to get to them. So first, let me jump over here. But how do you expect better numbers when you're less available? Okay, no, freeloader. Yeah, that's a good question. How do I expect increased numbers? By investing my time in activities that produce better numbers. This activity does not. Okay, that's why I've been streaming for quite some time consistently. My numbers don't grow, which means my time on top of my opportunity cost, because I'm doing this during market hours, my time isn't being used in the best way. Because you have to understand something. It's not just the 90 minutes or whatever that I'm with you. The entire hour before this, I have to set up. It's not like I can do something else at the same time during that hour. So that hour is consumed, even though I'm not streaming. Then I have to set up and all that other stuff. So it's very, very time consuming, and there's no outcome. There's no result for me, at least with just views. I mean, people won't even click on the like button, and that's free. Okay. So anyway, I have to invest my time more effectively. That's why. And that time will be invested in more content production, just not these particular streams. All right. But anyway, thanks for mentioning that. All right. So let me jump over to some questions here. All right. So Bill, NEE. Bill was the first one in the channel. He made sure he was the first one so I don't miss his question. NEE. It's one of these energies. Okay. So let's first take a look. Let's go to the weekly chart. Right. Let's go to the broadest time frame. Let's see what we have going on here. So, energy has been all over the place with oil and all that other stuff. Oil got hammered recently, right? So these things are strange. The things that are driving these things, especially with geopolitical tensions and stuff like that, don't get caught up in all that. Instead, start with the bigger picture trend, and let's take a look at some levels, okay? So you have this support over here, and you have this resistance area up in here. This thing has had a nice run in recent weeks, okay? But it's in an area that, like, if you're not long, this is not the place to go long. If you're long from a good price, this is certainly a place to be taking something off the table. I mean, like half the position or something like that, because you're in this is a vulnerable area for a pullback, okay? No matter what the, underlying source may be, right? Because obviously oil hasn't been acting like this. So I don't know what's driving this thing. I don't know what next era. Maybe they're into some other type of energy thing. I don't know. My point is, don't get mixed up in that. This is a place to sell. Now, if you're looking for longs, let's take a look at the smaller time frame here, right? You're looking for a new long. You need to wait for a support. I mean, look at this gap. I'm guessing this was a company report or something. I don't know what that was, but this is your support right here, okay? And that is 81.5, basically. So in a situation like that, you'd want to give the market a chance to maybe go back, test that number possibly. Also, keep in mind, gaps like this tend to act as support or resistance levels. So in this case, you're looking at a potential support. somewhere inside of this area, which is what, 80, 82 and a quarter area. So that's what you want to wait for, okay, if you're not long, and see if you can get a reversal, some kind of buy signal somewhere around here. Again, this game, when you're playing, especially when you're playing this swing trade game with these stocks, you want the stock to come to you, right? You don't want to sit there and react to this thing. Let it find first predetermine a level, let it test that level. If it can't get there, maybe it gives you a buy signal sooner. You're going to have to account for the extra risk. Situations like this are also very good for options. Okay, I don't know if the stock has options, but this, like when things are like ridiculous like this, if they get ridiculous, there's options give you more flexibility. All right, in a lot of ways, particularly when it comes to managing risk. So at this time, again, this would be a place to reduce risk, not add more risk. Does that make sense? Overall, I mean, although the general trend is bullish, but this thing is near that range high. So you have some reasons for this thing to technically pull back some, right? Again, this game is about identifying risk and determining if you're in a location where probability might be more on your side or more stacked on your side. Certainly not a place. And some people will say, well, why not get short then? If you think it's going to pull back, because you're fighting something that's generally strong. So it's usually not a good idea to play that game unless it's a very small time frame. Okay. Okay. So especially with these stocks, because they come out with some stupid report. Next thing you know, it's gapped higher. All right. Eligius, ZN1. Sure. So I was looking at that the other day. So the 10-year note. Okay. Look at this thing. This thing is basically, for those of you that have been coming to some of my recent webinars, I could say that because they're previous. Okay. I talked about the economic cycle, right? And basically the bonds are at the forefront of it. The bond market is basically the starting point, right? That's why the bonds are so important, especially in this inflationary environment. We talked about this a couple of weeks ago, or it might have even been during the webinar. We talked about this location on the bonds, right? This is the 10-year note futures. Even though we have this rally, right, which means rates were basically coming off, right? The market was actively reducing rates, right? The Fed doesn't control the bond market. They can affect the bond market, right? The Federal Reserve controls the Fed funds rate, which is how much money banks have to pay to borrow money, right? And then, of course, the banks will add their cut to it, and then they lend money out to others, okay? So that's the fractional reserve system. Now, the Federal Reserve can affect the Treasury bond market in things that they do, but the bond market can act on its own, right? Whether the Fed wants to do something or not. So the bond market was doing this for a while and getting everyone excited, thinking, the party is coming back, right? The easy money is coming for whatever reason. The bond market is pricing in a recovery, blah, 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 nonsense. Well, we touched this resistance area, all right, which I was suspect of, because remember, it takes a long time for the bonds to do something. Bonds are very slow moving. It takes months for them to really give you any kind of sign of something significant, right? So all of this really, really has not meant much to me, because it's like, well, how do we do at the first resistance? We reject it, okay? The bond market says it's rejecting it, okay? So for me, nothing has changed. This is not a change in the bond market. We have a potential structural change here, which was temporary, but what's up with this? Okay, so we also have this red candle here was NFP Friday, okay? That red candle was produced on NFP Friday, and we have this little green candle that's trying to come up a bit, but so far, that's an inside bar and a bearish continuation pattern. So far, I believe the bond market is closed right now. So we have to see how this continues tomorrow. But this right here, this movement right here, could be the beginning of the next leg lower, and we'll know confirmation when we get the support break here. What is that, 117 area? So price clears that. Rates are continuing to rise is what that means. And as rates rise, they put pressure on everything, bearish pressure. Now, it's not one-to-one like people want it to be. It takes time for that pressure to mount and add up. And then next thing you know, some catalyst comes out of nowhere and the stock market gets hammered, and no one can figure out why. They think it's the catalyst. Meanwhile, the bond market was putting that pressure in there all along, right? It takes time. People don't pay attention to the bond market. Now, let's take a look at this real quick. Because whenever you talk about the bonds, you should take a look at this. This is the US dollar, because the dollar is affected by bonds, all right? Or basically the interest rates. Does this chart look bearish to you? No. Okay, and people can give you all kinds of arguments for this thing, but this is the dollar, and you have a higher low over here, and it looks like, which is basically inverse of the bonds, it looks like it wants to start working its way higher. If the dollar continues higher and breaks out, it's going to confirm most likely higher yields, okay? And higher yields are bad for everything, and that means Bitcoin too, because Bitcoin follows the stock market. So use this and use the bond market as your gauge, right? So people ask, is now a good time? No, not with the dollar looking like this. It's not a good time. Not with the bond market looking the way it's looking. It's not a good time. That's where the party starts, okay? Or not starts. And if you're not aware of that, you're just basically you're just reacting to people's random nonsense on Twitter, basically, right? Financial entertainment at its best. All right, so I hope that answers your question about the bond market. Certainly a market you need to keep an eye on, okay? So I answered that question about Ben. Ben, you asked before, so that was my first question. Thank you for asking. Let me move over to TradingView here. Let me just see what people have over here. Okay, so Steve, appreciate that. All right, so let's move here. Can you take a quick look at CCL stock and give me your view? Okay, so CCL, let's take a look, Steve. Hold on a second here. So CCL, is that another energy stock? What is that? Oh, no, that's Carnival. Okay. So let's take a look at the bigger picture first. I mean, yeah, this thing does not look good, right? Bigger picture, you're fighting a very broad bearish trend, right? Lower high over here, right? Bearish pin bar, lower high. Now it's trying to find some support, but right off the bat, your long-term trend is bearish. Your midterm trend is bearish. There's no question, okay? Your short-term trend, let's take a look at the smaller time frame here. It's trying to find support, as we can see at this level. All right, what price is that? 8.5 basically, 850 area. It's trying to find support, but we just talked about those broader trends. They're not on your side. So this consolidation that's trying to develop here is likely at this point a bearish continuation pattern, not bullish, right? Everyone likes to think on the bullish side, like, oh yeah, double bottom. Okay, the trend is turning. This thing, in order for the trend to confirm, it needs to clear resistance levels, right? And all I see here are resistance levels. You have one here that's still perfectly intact. You have one over here, which is still perfectly intact, right? You have an old support over here. That's, I guess, relevant to this one here. You have another one up in this area, okay? Not even tested, not even in play, okay? So until those numbers, until those resistances start getting tested, there's no reason to be in this thing. On top of that, you know, I mean, look at this bearish pin bar today, right? The market still has some time here before it closes, but that's certainly not a positive looking close. That's a pin bar, and it's coming off of this resistance range, right? So not a good place to belong. If you're thinking, you know, investing and you want to start accumulating around these lows, because you're certainly not at highs, you're investing early. So, you know, what's going to turn this thing around? You're going to need some positive things, obviously, for their quarterly reports, and you're going to need a more supportive stock market, right? The stock market has recently tried to put like a little bounce together, and that's the best. This is the best it can do. This sucks. Okay, this is relatively weak. I mean, just take a look at the S&P real quick, right? S&P. This is what the S&P has done in a similar time. That's like a decent little rally. But this is still a bear market rally, and we haven't taken out any significant resistances, 42 being the first one. Really, we took out some of these. Okay, fine, that's fine, right? You want to argue with that? Okay, fine, but we still have this one. and it's starting to hesitate there. Maybe it continues. Maybe it breaks out. Maybe things change. I'm open to the idea, but there's no evidence yet. And on top of that, the bond market is not exactly being facilitative of this. Does that make sense? So even maybe we get like a CPI report that comes out more lower than expected, right? And we get like a nice little push up into here. My first question is going to be, can it sustain that? Or do we see this thing turn right back around, right? If we see that by Friday, like we see an attempted break and this thing is back into the 41s or going into the low 41s, it means nothing has changed. And it means that the market's still vulnerable, which means stocks are still vulnerable, right? That's how you have to view this right now. So as an investor, if you like that company for whatever reason, then small bites would be the way to go. And you have to account for the lower prices. If S&P has, over the next few months, if the S&P gets hammered for whatever reason, and you're seeing a test of these lows, stocks like that one are going to feel the pain, okay? Because they're relatively weak to begin with. So you have to account for that risk. And the best way to do that, smaller size, smaller than usual. Maybe you were investing, for example, maybe you were investing $1,000 a month, right? Let's just say. So you cut that to like $100. I mean, you cut that small so that if you do have to realize the risk and the market pulls back, you're going to be like, okay, no problem, I can handle it. Instead of sitting there worrying about every little tick because you're too big. Like a lot of people, that's typically what they do. Okay, so I hope that makes sense. Good question. Thanks for asking. I hope that answers your question. Okay, Nader. All right, so I answered that question. All right, prefer to hear. Okay, thank you. Is there a huge accumulation at 2165? What is your idea? So as far as Bitcoin, right, going back to Bitcoin here, huge accumulation, there's no way to know, okay? I mean, people can make all kinds of arguments and they can say, oh yeah, there's this, there's that, blah, blah, blah. All we know is that it refuses to take out support or resistance levels, right? This is what you need to pay attention to. So you can argue, and if you look at like a market profile, you could say, oh, look at all this volume that's accumulated over here. There's a lot of accumulation, right? All this nonsense. But if we're not taking out resistance levels, it doesn't matter. If we're not taking out resistance levels, that means it's vulnerable. And this thing can turn just as quickly as it worked its way up here. So that's why I'm not optimistic at all, especially with the way the bonds look and the S&P looks. We're just not there. And this is typically a lower volume environment, which means the movements carry less weight. You can't put a lot of weight into them. If we were in an easier money environment or the Fed was laying off the rate hikes, they were going to, stop with that and whatever, then I would be a lot more optimistic. Okay. Seeing something like this, I would say, okay, the market's stronger. Just like when Bitcoin was at the 30Ks a year and a half or 2 years ago, when it pulled back, I forget the prices, but when it pulled back, I think it was maybe the push to 40K and then it pulled back. I can't remember. I was much more optimistic, right, around the 30Ks or whatever. And that was part of the reason. We had not broken any supports. We were just it was just a broader pullback. We don't have that situation right now. All right. And we have a Fed that's not being friendly. Okay. So you have to keep that in mind. All right. I hope that answers your question. All right. Kava, CAVA. All right. I'm assuming that's an altcoin. Kava, USDT, I'm guessing. Let's take a look. So yeah, look, all these altcoins, by the way, if you haven't figured it out yet, Bitcoin is still the leader, right? I get people arguing with me about how Ethereum is the leader. Bitcoin is still number one, okay? And as long as Bitcoin is still number one, if Bitcoin can't perform, the whole sector is most likely not going to perform, right? So you have these altcoins that are starting to drive people in, right? You're going to see fake gurus all over YouTube. They're going to say early investors. They're going to start with the early investor talk again, going to make trillions and billions of dollars and all that other nonsense. Please don't get fooled. You have this little movement. This is a weekly chart, okay? Now, look at this. Pay attention to your levels. Look at this. These are old support levels, right? See that area right there? Old support levels. Those are likely to act as a resistance going into it. Look where you are right now. Look at this rectangle over here. So you're not exactly in it yet, but you're going into it. So bad place to be putting on positions, especially if you're thinking long-term. Very bad place. It's highly vulnerable, okay? If you want to play that game, you should be accumulating inventory when it looks its worst, not when it's here like this. This is not good at all, okay? People, of course, they think it looks safe. Oh, it's going higher. It's going higher. You're looking at history here. You're looking at what's occurred previously. You have to think ahead. So most likely, I mean, imagine just for a moment, the people that all bought up into this because they thought, hey, some news came out or there was some chat room somewhere pumping this thing and blah, blah, blah. And they're looking ahead thinking it's going higher, but, then you get stuck in this thing, right? So again, don't get sucked into these potentially bear market rallies. If you want to play the accumulation game, do it at lows. Chances are the structure in the environment favors a test of low or at least a higher low, right? So I would wait if you believe in whatever this garbage coin, they're all garbage coins, okay? In case you haven't figured it out, altcoins are basically just a way to rob you, most of them. So I know some people get mad when I say that, but that's the reality. They're not real assets. They're not like stocks that produce things and pay investors. These are highly speculative assets like penny stocks. You have to think of them that way. So my point is this. If you're going to play that accumulation game, give it a chance to test lower prices because you're likely to see them. Now, if you don't see lower prices, right, there's always that possibility that the market may just get stupid again, right? Markets are irrational. Small bites at least will protect you in case there is that hammering. So if the market's going higher and you're buying into highs, you should theoretically buy smaller. I can't tell you what to do, but if you have, for example, $1,000 to invest, and it keeps going higher, you invest $50 out of that 1,000 and you have 950 on the side waiting, okay, for better prices. And you will eventually get better prices. Now, those better prices may not be these lows. They may be this higher low over here, possibly, okay? But if Bitcoin tests its low at 17K, if it does something like that, if the S&P gets hammered and tests the 4,000 level, okay, or lower, 3,800 area, these things are likely to test those lower prices. So you have to account for that risk. Again, there's no way to know if it will get there. You have to account for the risk. That's the best we can do. All right. So if you like the dreams of forecasting the future, this is certainly not the place. Okay. Those are dreams. Okay. So good question about Kava. And most altcoins, if they look like this, it's the same story, just so you know. All right. Let's see what else we got here. So US 10 yield. All right. So Nugget, I answered that question. The US 10Y, which is the yield, it's the inverse of the US 10 futures, the bond futures. So basically, if the bond futures start selling off, which they look poised to do, the US 10Y, the yield, should continue higher. Okay. And with the dollar looking the way it looks, yield is likely to go higher. Okay. Especially if that inflation report on Wednesday comes out too high, because it's going to convince the Fed, or it's going to prompt the Fed to continue to be hawkish, and the market doesn't want to hear that. Okay, can you do analysis on BTC USDT perpetual? It's the same thing. Perpetual contract is the same exact thing. It's just the futures contract, right? There's all like BitMEX and all these other exchanges. They have like Bitcoin futures. It's the same thing. Same. I mean, the levels might be slightly varied, but it's the same story. Okay. So if you're working like with the perpetual contract and you're basically working like as a day trader, then you should be looking at the 24K as a resistance level for possible sell signals, whether you're on the short side or, there are some minor supports at like 23.5, 23, 22.8. You should know those numbers and be looking for potential day trade longs. But again, an optimal profit target for a day trade on something like Bitcoin is probably a couple of hundred points, maybe 500 points or something like that. But if you think you're going to make like 5,000 points, you're being unrealistic, okay, as a day trader. All right, so let's see what else we got here. U.S. oil. Okay, oil. All right, now hold on, Nugget. You asked a question before, so let me jump over here and get some more questions off on this chat on this channel. How am I doing with time? Okay, so I got ZN1. Okay, hey, X from Spain. All right, I said hello earlier. Let's see. Okay, cool. All right, you guys, just looking for the next question. Can you take a look at Intel? INTC. Let's take a look. Let's take a look. So Intel, of course, one of the top semiconductors, is one of the worst performing of this sector, right? I mean, you compare Intel to NVIDIA to Taiwan Semiconductor. This thing is not doing well. And this is certainly going to be a weight on the NASDAQ because it's one of the more well-known NASDAQ. I mean, it's not a heavyweight because now you have new stocks that basically bully the NASDAQ like Apple. But I mean, look at this lower high right here on Intel. This isn't good. It's testing the low. This is not a place to be looking for longs, even though it could be a double bottom. You're not in a supportive environment. I don't know what Intel's debt situation is, but if they borrow a lot of money, it's certainly not a good environment to be borrowing money, okay, with rates constantly threatening to rise. So this is all bearish. I believe they had a report recently, their quarterly report, right? I think is what led to this gap, I believe. And you're testing the lows again, right? After that, after basically put in a lower high. Now look at this. Look at this price action right here. Again, people get fooled by that, and they think they get too focused in on recent data, right? They'll look at this and they'll be like, oh, look, higher low, higher high. Oh, Intel has a new trend, right? That's what a novice will say. Meanwhile, it hasn't taken out levels like this. And instead, when it gets there, the first thing it does is hesitate. That is not a change of trend, okay? It's just a temporary small time frame trend change, if you want to call it that, trend change. But on the bigger picture, nothing has changed. And you have an environment that does not support Intel. So likely this thing is likely to break lower, and which will put weight on the NASDAQ. Now, if you're an investor on Intel, I mean, is Intel a penny stock? No. Is Intel a high quality asset? I would imagine so. I mean, their chips are in everything. So, if you're looking to accumulate Intel, again, it has to be small because this thing is poised to go lower in an environment that is vulnerable, right? So there's no reason to go big. Oh, look, double bottom. This is the time to go big. No, it's not the time to go big. This is not a friendly environment. Does that make sense? So I would still be bearish on Intel. And what's the price of Intel now? $35.40. This thing can give back another $5, maybe more. Right? It depends on how that S&P performs. Keep in mind, the S&P had a recent couple of weeks or a month or two or whatever has had a decent little rally, right? Bear market rally. This is what Intel produces while the S&P is doing magical stuff. This is not what you want to see, right? This thing should be in line with the S&P, which means if the S&P sells off, which it has not done, where is this thing going to go, right? So this chart is telling you something, that internally there's something wrong. Understand that price action or price, it factors in all the known information in the world. That's why technical analysis has any plausibility at all. Otherwise, this would just be a complete joke. It's almost a complete joke, but it's not a complete joke. There is some value in it if you know where to find that value. And you have to appreciate price for what it tells you, okay? So we can sit here and we could look at all the fundamentals on Intel and sit here and talk about it for hours and waste our time. Price wants to go lower, and there's some reason for that. It doesn't matter the reason. All that matters is that it's weak and that it's likely to go lower. That's really all you need to know, okay? So I hope that answers your question. So again, if you're looking to invest in Intel, small bites, right? Accumulate small until we start to see some changes, primarily in the bond market. All right. So let me see here. All right. Here. Oh wait. So let me just go back here. Hold on. Let me answer another question in the YouTube chat. Okay. Hold on here. So that was Intel. Greetings. Oh, from Ankara, Turkey. Oh, Levent. Oh, cool. Okay. So we got my Turkish people. I'm very popular in Turkey. I've been to Istanbul, by the way. All right, Peter. So quite a few alts start. So I talked about that. I answered that question. Okay. All right, I got David from Miami here. I love Miami. Do you think it's a good moment to look at short Monero? All right, that's an interesting question. All right, so let's take a look. XMR USDT, Monero, as a short. All right, let's take a look at the weekly. Now, that's an interesting idea. Let's consider the location first. Okay. You have, in my opinion, you have the right idea because you are at a resistance area in Monero. And that resistance area happens to be around the 180 price level. Okay. Around there. So you have the location. You certainly have the environment that's more favorable for shorts at this time, I would say. The thing is, you don't have a signal. Okay. So you're still fighting short-term bullish momentum. Let's go to the smaller time frame here. As you can see here, right, higher lows, higher highs. This year, since, what is this, June, right, your short-term momentum is bullish. So while you're now in a location that makes sense for shorts, I mean, look at this here, right? You're entering this area, which certainly I wouldn't be looking for longs here unless you're looking at day trades. If you're thinking of swing trades, you're in the right place, but you need to wait. Okay, you need to see at least a sell signal. You don't have that. You have an inside bar at the moment, which, again, keep in mind, if Bitcoin continues to work its way higher, these coins are going to push a little further, right? And it could be irrational. It doesn't matter why. Everyone wants to know why. Markets are irrational. Just accept them for what they are. Don't question them, right? No reason to question price. That's what leads to confusion. You think that you're gaining some kind of knowledge or some kind of control by questioning, oh, well, why? Is there some news? It's meaningless. It doesn't matter if there's news or not, because if there was news, that information is worthless and ancient. The party is over, okay? You're not going to get anything from that news. You need to be looking ahead, and no one knows anything about what's ahead. So you have to consider these levels, right? Certainly an area that's vulnerable for longs. You have an inside bar. You take out the low of the inside bar. What is that price? 162. So you can basically round that to 160. That will be your first sell signal. Again, on top of that, that would be a failed high. For those of you that know what I'm talking about, this would be a failed high area if you get that. Of course, Bitcoin should be producing a similar pattern. If Bitcoin's rallying, you're probably not going to get that. So you don't want to step into this thing too early, okay? Wait for the confirmation. But I like the idea on the short side if it can give you the signal, right? Other signals to watch for here, besides the break of that inside bar low, bearish pin bar, something like that in this area, followed by a break of that low. If you get something like that, okay, you need to see follow through. Like, you need to see the next candle needs to be somewhat dramatic. You can't get like these little nonsense candles followed by like a green reversal candle. That's a lack of momentum. So as a short, if you're a short swing trader, you have to be very cognizant of that and be prepared to make that adjustment. Just like with those Bitcoin shorts that I called, I warned people. I say, listen, if you get the conflicting signal, be prepared to do something. Don't just sit there and stare at it, because it will stop you out. It'll go straight to your stop. Okay. This is a lower volume environment. Things can be very erratic and very irrational. Respect the price. Does that make sense? So if you're going to take the short, just be prepared. Now, at some point, there's likely to be a catalyst that will basically like knock the wind out of these things, and you will see it in the S&P. You will see it. Most likely, the bonds will be further ahead, but you will see that thing hit the S&P. Right, the wind will get knocked out of the S&P, and then you'll see these markets start to follow through. Okay, just keep that in mind. Again, I can't say that with any degree of accuracy, but I recognize the vulnerability, and that all you need is some bearish catalyst that no one's expecting. All these experts and all these fake gurus and all these big mouths, and they're all calling for this and that and this and that, yet they can't spot some kind of negative catalyst that may be right on the horizon. Okay, so that's why you have to account for risk and focus on risk. So I hope that answers your question. All right, let me jump over here. So U.S. oil. Okay, Nugget, get into U.S. oil now. So U.S. oil. Can I look at U.S. oil? Let's see. All right, yeah, I can look at that. So let's take a look at the weekly. Now, oil has been wild. All right, and obviously there's been geopolitical pressures on this thing. But the thing that struck me with oil is that the dollar has been so strong, and oil has ignored it until recently. Okay, Oil is now giving back, in the face of the strong dollar. Or this is how oil should behave. So here's the thing. General trend on oil is certainly arguably bullish, right? Higher lows and higher highs all over the place, okay? You have this support break over here, which could be a change. So midterm, we could say midterm trend here, we can argue is range bound because we don't have a higher high over here. This is not a higher high, right? It's been higher. And we have this fooling around in the support area, right? So it's not like it's moving straight, in a straight line. It's trying to find support in an area where support is likely to develop, right? So we can still argue that this trend is still bullish, okay, at this time. This is the weekly chart. So if you get this inside bar, today is Monday, you have a whole week for this thing to develop. This thing may turn into something else, right? So let's take a look at the smaller time frame. So if you're thinking long on oil, this is certainly an aggressive area. And because your short-term structure, this is bearish, okay? So you're still fighting that, but the bigger picture is bullish. This is where things can be confusing. So trades like this, right, because you're going against that bigger picture at this point, trades like this I would consider aggressive because usually the shorter term momentum is what's in play until it changes, okay? So you can either take the aggressive long, right? If it takes out this high, what is that, 90? Basically just about, about high 90s, takes that out, you have a potential swing trade long. But keep in mind, this is oil, right? And oil can be wild and can do all kinds of crazy things. It's very news sensitive, right? But you can either take those aggressive, look for that aggressive long, or you can wait until it starts clearing resistances like this one here, which is 101. So it's got some ways to go there, right? But it can do that. The way it's been moving, it can do that in a day or so. So you can either wait for something like that if you want to be more conservative and then start looking for longs, because that would confirm the change of structure at that point, right? And that would say that the bearish structure, if you get the break up here, if you get this break, that confirms that the bearish structure is no longer in play, or it doesn't have the same grasp or the same strength. Does that make sense? But that takes a lot of patience, and you may not be patient enough, or maybe you're more aggressive, which is fine. But so if you want to be more aggressive, this is the place to look for that long, and see if you can at least get a test of this resistance high. Because at this moment, we can't say that a bullish trend on the smaller, within the smaller structure is in play yet, but it may return. Does that make sense? So those are your options with oil. And speaking of options would be a great way to play something like this, okay? You can do like vertical spreads on something like this, and it really takes a lot of the risk out of the picture. And the options give you the ability, at least in my opinion, to be a lot more aggressive. Of course, you need to know what you're doing with them, because if you don't know what you're doing, just like anything else, options will just, you'll get robbed like anywhere else. I see a lot of fake options gurus who have no idea what they're doing. And they're telling people to go long options all day long, which is the worst possible thing you can do most of the time. We're in an environment right now where we're actually long options. The premiums have gotten so beaten up. The price inflation in the premiums is so low that long options it's rare to see that. Long options actually make sense right now. Okay, because you're not overpaying for them. But typically, long options are inflated, and they're inflated with time value, and it's usually better to short them. Okay, anyway, and anyone that's an expert in options should know that, and not be telling people to be buying options. All right, so okay, so Hamza, I don't use any. I use price action analysis. So, again, I get those questions sometimes where people are like, oh, why don't you use the RSI and all that other nonsense? They don't provide, there's no advantage to using them at all. None. Okay. So most of the time, they only give you old, obsolete information because they're lagging. They're smoothing price over some period of time. And no matter what you use, RSI, stochastic, moving averages, nonsense, blah, blah, blah. It's all the same garbage. Okay. Understand. You cannot beat an efficient market, especially with conventional methods. All markets are highly efficient, and they're only getting more efficient. That's not something I made up. That's called the efficient markets hypothesis. And it's not 100% true, but it's most of it is true, especially on smaller time frames. I mean, markets do trend, so markets are not 100% random, but most price action is random, and you can't beat a market. So you have to look for an advantage, okay? Hedge funds and market making firms hire the smartest people in the world to find statistical advantages. So if you want to play that game, you have to become a financial engineer, get a PhD, and go get hired at a market making firm. Now think about this real quick. If you went to MIT, which is a big school in this country, engineering school, you get your PhD in financial engineering, why wouldn't you just go and open like a Forex account somewhere, right, with a couple of $1,000s in it? Maybe if you don't have any money, you raise the money from your friends, and then you just make a robot. Because you're a financial engineer, you should be able to pull money out of the market freely and easily, right? Why don't they do that? Because they can't. Instead, they go and get hired at a market making firm for $350,000 a year and solve engineering problems, okay? Because to find a statistical advantage is a very, very hard and rare thing to do. As a retail trader, I don't look for statistical advantages because I know they're almost impossible to find, and I'm not a PhD in mathematics or physics. Plus, they're playing they're playing a game where they're competing on speed. I can't even begin to explain that game, but we can't even think about competing at that level. So we have to look at human behavior, okay? Behavioral finance. And human behavior is the only thing that repeats itself consistently throughout history. You can have a new trader come into the market, get wiped out, right? They quit. Another trader comes in, takes their spot, and they make the same mistakes. That is the only chance we have as a retail trader. But in order to capitalize on those mistakes, we must first get beyond our own human nature. Otherwise, you are the one being robbed. Does that make sense? Because human nature is a big liability in this game. Okay, people like, it's the market makers. Oh, it's this guy. Oh, it's Elon Musk. Oh, it's that guy. Right? All this conspiracy theory. But the number one culprit is human nature. That's the first thing. And markets are efficient. So you combine the two, and it's set up perfectly for a gambling environment. This is not a game of skill. This is a game of chance mostly. That's why no one wins. Okay. And that's why it's so hard to win. If this was a game of skill, like everyone implies, right? All these fake gurus, it's just a skill. You just have to learn a couple of things and you'll be making millions of dollars just like me. It's nonsense. All of that is a dream. That's all it is. And there's many ways to fake that, by the way. The thing is, if you want to beat a market, okay, like I said, you have to get beyond your own human nature. The fear and the greed and the emotional reactions make you part of the herd. Why do you think Forex brokers are so happy to give you leverage and take the other side of your trades, right? Because they know markets are efficient. You can't beat them. And people are emotional, right? Perfect if you're the broker collecting fees all day long. And hey, here's some margin. Here, we'll lend you the money. Here, you can trade huge positions with your $5,000 account. No problem. No problem. Here's some more leverage. Here's 500 to 1 leverage. No problem. Why do you think they're so happy to do that? Because they're in this game to lose? Okay, let me move on because I'm ranting. All right, so that answers your question. Whenever you ask me about things like, oscillators and all that stuff, that certainly will prompt me for a rant. Okay, AMP USD. All right, let's take a look. AMP USD. What is that? Oh, AMP. Okay. All right. Look at this. Okay, who asked me about that? Who asked me about AMP? Okay, Tanner. Yeah, let's take a look. Yeah, I guess I haven't received the memo on this one. Look at this mess. Okay, there's nothing here. This you got, if you're in this, you got robbed. Okay, this is, hey everyone, let's come up with a fake altcoin. Let's pump it in a chat room somewhere. Let's collect as much money as we can, and then let's sell it to them. Okay, this thing, I don't know. With Bitcoin coming off 17K, this thing should be doing a lot better than this. This is complete garbage. Okay, there's nothing to talk about here. You have lower highs, and not one resistance is even tested. Complete garbage. How much is this thing? It's like a fraction of a penny. Okay, it's like 5 zeros in. This is toilet material here. Okay, so yeah, let's move along. Not going to help anyone with that. Let me see what else we got here. All right, let me jump over here. Okay, do you think it's a good moment? Okay, I answered that question. VIX. Hey, Kai, how are you? Let's see, VIX. So the VIX is basically measures the put activity in the S&P primarily. Okay, and the VIX has been. I've observed some interesting reports about the VIX from some option traders, and this thing has been relatively low. Okay, usually a lower VIX means a stronger market. Typically, it means that no one's buying puts, and no one meaning hedge funds, people that usually buy big numbers of puts aren't buying them. All right, which means there's no hedging going on. Right, that's what this means. People are complacent. People are not fearful, certainly. And if the VIX can make it at these lower levels, that's likely to be a peak. But here's the thing with the VIX. I mean, you can't take this thing too literally. It's very relative, okay? And levels on the VIX always change. Some people say, well, when the VIX gets to 14, that's the market top, and all this other nonsense. It's all relative, all right? So I would look at this as, look at some average lows, right? You're basically around an average low. This would be a good place for the VIX to turn around and spike. Now, the VIX, again, it's not behaving like a regular market where it's like all about, supply and demand. I mean, this is basically an index that measures fear or protection, right? So when the market turns, you'll see the spike. And all we know is the market is in a vulnerable position for such a thing, and the VIX is in the same type of vulnerable position. So I don't think the VIX is as useful as it used to be as far as trying to forecast, the S&P. So don't get too confused by it. It's nearer a low. So certainly if you're looking at any type of VIX product, certainly you don't want to be taking any kind of bearish positions on the VIX. If anything, you should be thinking bullish because, this thing is likely to spike, which means S&P is likely to spike on the bearish side, right? Because it means more puts are being bought. Does that make sense? So yeah, I don't look at the VIX too much. I just don't think it has the same value. Look at this. Look at how much time it's spent in here. Okay, I mean, this is going back. This is a weekly chart, but what a it's completely like, what do you do with that? Okay, so yeah, I would just look for some relative levels and try to work with that. But I'd certainly be, if I'm thinking anything with VIX, I'm thinking long VIX, which is bearish S&P. Okay, and I've been bearish on the S&P. Okay, I hope that answers your question. ETH, Ethereum's up 100% from recent low. It's not like it's hard for it to do 100%. Are you going to buy into that recent low? Doesn't mean anything. I mean, well, let's take a look at Ethereum, right? I mean, let's see. So people look at the recent low and they say, oh, look, it doubled, right? What's the recent low on Ethereum? 879. And this thing is at like basically made a high of 18. So it basically doubled, right? But are you going to have the confidence to buy at that low? Most likely not. Okay. I mean, it's not wise after the fact. Sure. Oh yeah, bought Ethereum at the low. That could have been this low over here too. Okay. Unwise to buy such a low. Maybe if you were more into the double bottom situation, but still you're going against a lot of stuff here. It's very risky. If you're willing to take that risk, okay, great. But means nothing that it's over 100% off of its low. Means absolutely nothing. Okay, but thank you for mentioning. Burak, you say that below 20K, okay, invalidates wave count of 4. Okay, so it's a good question about wave 4. You say price will most probably go lower. It holds 20K. Isn't it bullish? Okay, good questions. So back to Bitcoin here. Now I've talked about, hold on a second. I've talked a lot about Bitcoin and wave 4 because that 20K area was a very important area as far as wave counts go. Okay. Now, if you notice, Bitcoin, when we were messing around, hold on, let me just change something here. These levels are, I don't want to have all, this chart can be confusing for people. So I got to put my other chart on here. Okay, hold on a second. So here's what you need to realize. As far as wave 4 goes, and let's take a look at the weekly chart for that. As far as wave 4 goes, right, we basically, Bitcoin is fighting to stay above 20K, which means it's I would still consider this still inside of wave 4, because even though it broke it temporarily, it was very temporary. It spent maybe a day or two, a couple of days. That doesn't count in the bigger picture, right? So it pretty much rejected that 20K area, and it's struggling to stay above it, which means at this point, wave 4 is still in play at this point, okay? So as far as breaking lower, we have to see how this thing goes. So that's why you say, well, it's been holding 20K. Isn't that support? Isn't that strength? It's temporary. So like I said before, this structure right here is a bullish structure. It's got higher lows and higher highs, but it hasn't changed the bearish structure. So that's why I'm not bullish on this at all. And if you look at the environmental factors, there's really no reason to be bullish, right? We still have a very aggressive hawkish Fed, not a dovish Fed. Bitcoin is a speculative instrument. It's not a conservative instrument that does well in, it's not a defensive instrument. It's speculative. It's like a penny stock. And if rates are going to continue to rise, that's not good for Bitcoin. Okay. So that's why I have no confidence at all in something like this. I don't care how long it holds 20K. But at this moment, if you want to argue about the wave count, we can still say wave 4 is still intact. But if we break back below 20K and then we spend a lot of time below 20K, I will consider that broken. And then I'd be looking for those much lower numbers, because then we're likely in a wave 2. Okay, which can take us back much lower if that's the case, because wave 2 can retrace 100% of wave 1, right? It can retrace 100% and go all the way back to the beginning of wave 1. That's the potential of wave 2, if that's what we're in. At this time, it's too early. We can't argue that we're in wave 2 right now. We can still argue that we're in wave 4. All right. But like with that kind of stuff, people get very confused with Elliott wave. Don't let that sway you, right? That's why you have to pay attention to the bigger picture and the smaller picture at the same time. And you have to know your strategy very well. Like, what are you doing? If you're a day trader, then you're not going to be thinking of that the same way as you would if you're a swing trader, or an investor. Does that make sense? Okay. So, all right. So I hope that answers your question. All right. Let me see. Let's move along here. So good question, Barak. Good to see you. Okay, hold on. I'm just catching up here. I believe it invalidates at 17K. No, so 20K is the level, freeloader. 20K is the level, but it refuses to stay below 20K. So you have to be, when it comes to Elliott wave, you have to be very flexible when it comes to those wave counts. Okay. Right. So Alex, okay, let's see. Trust wallet token is one of the alts. Okay. I don't get it. Why? Because it's taken. Okay. All right. Is that something you want me to look at? All right. Okay. I'm just trying to catch up here on the chat. Hey, Ken Burke, how are you? Good to see you. Student of mine. I always watch your vids, but after. Okay. Okay, cool. Sean, hey, good to see you. All right, cool. Sammy, what's your trading view profile? Mark P Markets. Just, you can go over there. You can take a look at that. Okay, just Mark P Markets on trading view. That's my profile. Okay, so Sean, Bitcoin short. Sean asks me about Bitcoin short. I'm still bearish on Bitcoin. I mean, I'm not going to short it myself. I certainly wouldn't be going long here, like I said before. So I would be looking for the short signal, like I mentioned. Okay. Umbrella Girl would boost likes. Umbrella Girl. Okay. Not sure what you mean there. Wedge, maybe it's the wrong chat. I'm joking. Okay. James, hey, good to see you. If you could do a small analysis on BTC in the weekly. All right. So that's pretty simple. Let's go back to the weekly chart here. Okay. Hold on a second. Okay. So weekly chart. Now look, the wave counts. I'm not gonna draw the numbers. I'm just gonna give you like the areas, right? So we have here, this is going back on the weekly chart. This is your wave one, okay? This is your broad wave one. And that height was basically 20K, okay? This is the bottom of wave two, 2018, or what is that, right? 2018 bottom, wave two. Wave three began here. This is basically the peak of wave three, we can argue, okay? Because you can easily count 5 waves, 1, 2, 3, 4, right? And this could be your 5th wave in here, right? 5 waves complete. This is where things get tricky because this is not the wave 5. Wave 5 should have continued. Now you can argue that it is because it went slightly higher and this and that, but wave 4s can fail. They could basically give you a failed high. I suspected that very early on. So I started calling this a wave 4 very early. And basically I was saying that it may behave in a similar way to gold because gold was doing something very similar to that. Okay. And I said, if we are in a wave 4 and this thing decides to test the bottom of it, it's not going to be pretty. And I mean, that's pretty much the scenario that we got. I was not forecasting that scenario. All I was saying was it's within range. It's a possibility. Okay. And that 69K peak was, that's the high. Okay. So basically you can argue that that's the wave 4 high and 20K is the wave 4 low. So this entire section is basically wave 4. Okay. So far. And if that stays intact, then a wave 5 can follow. And a wave 5 in this situation can obviously would have to take out 69K, okay, in order to confirm. Will you be getting involved? Can we identify wave 5 earlier? Possibly. When we see some resistances get taken out, more of a chance will be in a wave 5, but confirmation doesn't come until you're up here. All right. Doesn't matter how you slice that one. That's where confirmation comes in. You don't have to wait for confirmation, but that would confirm that, wave 5 is in progress. All right. So it's possible that we could be in the very, very early part of that, but I'm very suspect. I don't use those wave counts to formulate any long-term opinions because, like I said, if the Federal Reserve is not on the side of this thing, which it's not, then I don't know how we're going to get such a magical rally. Okay. We need an environment where money is easily borrowed, speculation. We need speculative money, easy monetary policy. Go call up Chairman Powell and tell him to change his view on things, and then maybe he'll get that Bitcoin rally. So while the wave count may point to something like that, we can't sit here and put any weight in something like that, especially since 20K is still vulnerable. I mean, we keep fooling around between 22, 24, 22. All we need is that break of low, and we're right back into that potential wave 4 break. If we clear those 17Ks, then we're looking at, we're not in a wave 4 at that point, right? That's when we can confirm it. And we're possibly in a gigantic wave 2, which means much lower prices likely. Does that make sense? That's how you have to look at Elliott wave. That's where, you can start accounting for that risk. But at this point, we can't account for that risk. That makes sense? Okay, let me move along here. Okay, let me see. So, all right. Just jumping back here. Okay, cool. I have a video, Cigar, refresh your screen. Do you also check YouTube questions? Yes. Okay. If you were to set a safety net with stops for BTC, hold on. I mean, if I skipped your question, I apologize. All right, I'm just checking the trading view here. Oh, Miami CEO. If you were to set a safety net with stops and you are generally long, where would you set the stops? And what we can, for bigger picture, I don't use stops. Okay. You can't use stops really. You have to manage your risk with size if you're talking about investing. Okay. So stops, you're asking for trouble because you're taking the most risk on the largest time frame and you're dealing with the largest ranges. So there's no safety net. You have to accept the maximum risk and you have to be able to absorb it. So, I know people want to go in with bigger size and you have to be able to take that pain. You have to be able to take the loss. That's the only way. Okay. There's no other way. If you put a stop and this thing has a big gyration, you're going to get stopped out anyway. Right. So that's why the better thing to do, or the more effective thing to do, is to go small so that you can handle the gyrations. And when the environment transitions and we'll see signs somewhere else first, not in Bitcoin, that's really when you can accumulate with more confidence and perhaps get bigger at that time. And you still may have to take some pain, but you'll be at least confident that there's a market bottom in, and there's a supportive Fed, which we don't have. Okay. Anyway, good question. Okay. Yeah. Oh, people, no video. You have to refresh the thing. Someone said that to you. Okay. All right. Thanks. Okay. No problem. No problem. Okay. Went over the BTC purpose, the same thing. What do you think of AMD? So AMD is a semiconductor. All right. Hold on a second here, you guys. I got to wrap this up here in a few minutes. I can't go like overtime like I usually do. So if I missed your question, I apologize. I'll do a couple more. AMD is going to be similar to Intel, right? Because AMD is a semiconductor, but AMD is much better looking. Okay. As we saw, Intel really looks like complete garbage, right? Now, AMD, competitor, a top semiconductor company, has rallied with the S&P, okay, which I guess you can even say contributed to the S&P rally, right, along with Apple. So here's the thing. As a swing trader, you're in a vulnerable area. This is where you have to use the S&P as your gauge. I wouldn't be buying S&Ps here, all right, not and trying to hold on to them. You're in a highly vulnerable area. So if you're not long AMD, now is not the time. If you are long AMD and you got it at some good prices, now would be a good time to basically take something off the table because it looks great here, right? This is when it starts to look safe, going right into this resistance. It starts to lure all the Robinhood traders in who have no idea what they're doing, and they're just reacting to things, okay? This is where you want to reduce risk, not add risk, especially in the face of that vulnerable S&P. Again, we're facing a potentially hot CPI on Wednesday. It could change things very quickly. It could lead to a rally, you know, for all we know. And you'll see AMD do something like this in a situation like that, since it's acting in line with the S&P. But this is certainly not a place to assume risk because you have too much potential here to go against you. Okay, so if you're looking to get long AMD, best bet, wait for a pullback. Okay. 87s, 87.5. I mean, this thing can do some, AMD can be pretty wild if it has, you know, a bad quarterly report or whatever. Some other news comes out, it can knock the wind out of it. But obviously, it's going along with the S&P here. All right. Or, I mean, you want to say NASDAQ, basically the same thing. So watch for support levels. Otherwise, this would be a good place to take risk off the table. And you want to hold on to some, you want to give it a try, you know, give it a try. But investing wise, I wouldn't be too heavy here, okay? Because I just don't have faith in the stock market just yet. All right, so that's AMD. And it's an interesting question too, especially in contrast to Intel, because you would think that they would look the same, but they're not. Okay, can you show a few charts that you're looking at? Okay, a few charts that I'm looking at. I'm not looking at any stocks, I'll tell you that. I only look at the S&P, I look at the NASDAQ, I look at the bonds. I look at the euro, I look at the pound, I look at gold, you know, and I look at oil, but not to trade. I just look at it. And that's pretty much it. I don't look at stocks because I don't like stocks. I don't like the way they are right now. Don't like the way how vulnerable they are. I think many of them are relatively weak because I don't like what the S&P is doing. Okay, so that's pretty much what I look at. I'm not watching stocks. This is not the time. I'm new and would like to know about, okay, so musical, I answered that question. That's why, okay, so you're new. Yeah, so I don't use any. I use price action, which basically I'm deriving all my information straight from price and things that don't smooth price, right? Just to add to the answer that I mentioned before. Okay, NVIDIA, NVDA. So again, price action is something that's, like I said, I'm using price action tools like trend lines. You can use channels, things that project price forward, proportional measurements, price structure, right? That's all price action based. I'm not using an RSI, as you notice, right? Because that's useless information. It does not help, especially in this type of situation, okay? Looking for these type of trades. So NVIDIA, look, very similar to that AMD situation, maybe a little more sensitive, right? But it's the same deal. Look, it's the same deal. These things are not breaking any significant resistance levels. They're just following the S&P. So in my opinion, it's just a bear market rally and sucking in people who have no idea what they're doing. If you happen to be long, like I said, unload some inventory if you want to lock some profit in, if you have profit. Otherwise, be prepared for potentially lower prices. That's all I can say about something like that. Okay. Do you find heat maps any useful, like the ones? Okay. Even though I'm not planning on using them, I don't use. It's interesting, but I don't really, anything that's a free tool. Just put it this way: if it's a tool and it's available for free, right? You're not paying anything for it. Chances are it's useless. Okay. If everyone has access to it, chances are it's completely useless. There's no advantage to using something like that. Okay. I mean, like it's like looking at like the most active stocks, and you look at the list of the most active stocks today. What do you see? Intel, Microsoft, blah blah blah. Okay, what information does that provide? None. Okay, nothing of value. So yeah, I don't use any of that stuff. I just think it's, people like to add lots of layers of complexity to things. No need to do that. You can get adequate information. Your goal as a swing trader, even as a day trader, your goal should be to make choices or decisions on the least amount of information possible. The least amount. More is not better in this game. I keep telling people that more is not better. People want more. Less is more. And the less information you can use, I think the better off you'll be. Okay. Of course, you want to have information that's of value. So let's see. People talking about tobacco in this. Tobacco. Okay. Yeah, I'm not sure what you mean by that. As it holds its value. Tobacco. So I guess like cigarettes. I don't know. I don't smoke. So I really couldn't help you on that one. All right. Let me see Miami here. What are your possibilities of ETH flipping since the lows? It has been outperforming. Okay, Miami, I answered this question in when you sent me the private question, where we currently see ETH as the largest market cap. Yeah, like I said, my answer to you in the private thing was, you're overcomplicating it. Okay, it doesn't matter. Bitcoin is the leader. Bitcoin continues to be the leader. Price action wise, it continues to prove that. Okay. When I always maintain an open mind, and at some point, if Bitcoin wants to change and Bitcoin no longer wants to be the leader, I will accept that when it tells me. But right now, it's the leader. I don't let any nonsense opinions or these complex Bitcoin dominance theories and all this other garbage cloud my view. The market speaks. I'm just a listener. That's it. I don't pretend to know anything. I certainly don't pretend to know more than the market. Okay, the market knows everything. I don't question the market. I may ask questions of the market, like, market, where are you? Like, where are you now? And is this level relevant or not? How should I gauge this level? But that's it. Okay, I don't question the market. It wants to do something irrational. That's what it wants to do. If Bitcoin no longer wants to be the leader, it's up to Bitcoin. Okay. I'm not going to sit there and guess that it's going to do that or something like that, because there's no way to know. You're just overcomplicating things. Okay. All right. So let me just see what I got here. I'm going to answer one more question. Again, if I missed your question, I apologize. Let me just see if there's an easy one that I can answer here. So we are in a C correction. Okay, Alex, about the Elliott wave, don't get wrapped up in that stuff. We are in a C correction wave inside of a wave 4? Possibly. But things, just look at the wave counts in a broad view. Don't try to sit there like in my homework assignments. I make people label the wave counts because it's a good exercise. You should be familiar with how to do that, but don't sit there and try to formulate opinions on them. You're better off looking at price structure and levels, okay? Because they're much more relevant to the market now. All right. Stian, CHZ. All right, let me just see what other questions I have. I've seen people doing monthly wave counts and weekly wave counts. Yeah, they're super expensive for me, actually. Oh, okay. Yeah, look, the thing with wave counts is everyone has their own interpretation. It's highly subjective. Now, when it comes to wave counts, there are some basic rules that are not subjective. They are objective. Like, you can't argue with wave 4 basically overlapping wave 1. You can't argue with wave 3 being the largest wave. And you can't argue with wave 2 correcting 100% or not going beyond 100% of wave 1. You can't argue with those things. Those are rules of an impulse, right? That's like an objective view. But when people start interpreting, like, well, I think we have a C of a B of a this, of a that, of a this, and I think don't go by that. Do not go by other people's wave counts. Okay. Even if you go to like Elliott Wave International, where like they're like the authority of Elliott Wave. I mean, even there they have like conflicting stuff. Don't get caught up in that. Look at the broader view. Focus more on levels. Focus more on momentum, especially if you're thinking shorter term, because that's really what's going to give you the weight. Okay, momentum. That's why I don't question the market. I accept it. I accept the momentum, however it wants to behave. Okay, how do you know when to buy or sell something? How do I know? Price action. Okay, I have confirmation. I have setups and confirmations that people that are familiar with my work, they know what I look for. The confirmations typically come from candlesticks, but the candlesticks have to be in a particular context. I can't go into more detail, but thanks for asking. Sweater. So DCA everything. Well, no, don't DCA everything. You have to have a defined strategy. You have to know what you're looking to do. You have to have a goal. You don't just dollar cost average everything. If you're an investor and you have a particular amount of money that you're looking to invest, it's wise to break that amount of money up into conservative and aggressive investments. First of all, the conservative are going to be made up of certain products or markets that are conservative, right? But people instead, they put 100% into these garbage coins, which are highly speculative. That's not a good idea. So if you have a large, we're talking, if you have $10,000 or if you have $100,000, you want to take a smaller portion of that and label it as aggressive. And then you can start building inventory in certain coins. Okay. It's a good idea to stick to the, in that subcategory of aggressive. You can then have like another conservative and another aggressive within that subcategory. Does that make sense? And then your conservative part of your aggressive category can be like Bitcoin because it's the leader, right? Something like Ethereum. And then you could pick some garbage altcoin like we looked at before. What was that? I can't even remember that one that was completely in the toilet. And that's completely just gambling, speculative. You want to throw $100 into that? That's your ultra speculative type of play. The ultra speculative, of course, they're going to be the cheapest, they're going to be the worst, and they have the most potential, but chances are they're not going to go anywhere, right? You're playing a lottery basically. And if one of them, if you invest in 10 of those and you throw $50 here, $100 there, $50 here, and one of them does something spectacular over the next couple of years, that's your home run. But there's no way to know in advance. You're gambling, okay? Again, markets are highly random and efficient. There's no forecasting. There's no long-term forecasting. Everyone wants, where's Bitcoin going to be in a year? No one knows, okay? Some news can come out and change everything very quickly. Charts will not help you account for that. Okay, short ETH. Okay, call it you're shorting ETH. I don't disagree with that. There's no sell signal. What do you think of shorting ETH? Yeah, I'm just getting started. What should you do? Just getting started? Ooh. All right, well, first of all, number one piece of advice for people just getting started: don't expect to make money anytime soon. That's the first thing you need to accept, and accept right now. Secondly, you need to take some time to familiarize yourself with just the general things. Like, you should have a broker account somewhere. You should learn how to place orders properly, like basic stuff. There's no advantage to any of that stuff. You will not make money. If you make money, it's random, and you can't sustain yourself on random. So keep that in mind. You're fighting, you're getting into a game of chance mostly. You need to take some time to first get generally educated, okay, on the technical, more on the technical side of things. But there's 4 areas. I'm going to tell you this, and I don't talk about this very often, but there's 4 areas that you should really spend the next couple of years investing your time learning, because it's going to take you at least a few years just to get comfortable. All right. So forget about making money anytime soon. But here are the 4 areas. First is academic. So, you want to know some basic theories like efficient markets hypothesis and random walk theory and those type of things. You should know those things. They're not going to make you money, but you need to know them because they give you a lot of perspective onto what you're dealing with. Then you have the technical side of things. Okay. The technical analysis and forecasting, that's going to be your fundamental and technical. That's going to be your charts and all that other stuff, right? That's where all the fake gurus point you first because that's all they know. But that's only one part of 4 areas. Then there's the behavioral finance area. That's going to be the area where you learn how human behavior fits into this whole thing. That's an important area because that's the only area that we can capitalize on as retail traders. And you will be subject to, because all the money that you lose will be a result of that, most likely. Okay. And that's where there's opportunity if you can get beyond your own human nature. And then there's the microstructure area. It's an area that you should be familiar with because you should understand how orders are processed and what that means. But you can't compete in that area. So it's just good general knowledge. Those are your 4 areas. But the most important, obviously, is going to be the technical because that's going to be the area that you use the most. But you need the other 4 to get a good, robust grasp of what you're dealing with if you want to be a market timer. If what I just said to you sounds overwhelming, then quit now. Okay? That's people don't want to hear that. But I'll save you a lot of money and a lot of time. Quit now, because you're not going to make any money anytime soon if you're in a hurry. All right. You're better off being a fake guru, get a big following, and you'll make more money much faster that way as a fake guru. All right. And just lie to people and tell people that you make money. You can do that. But marketing is hard, as I know, because I'm a lousy marketer. All right. So let me see what else. All right. So a couple more questions and that's it. Okay, let me see here. Think it's a short term. Okay, just trying to catch up on some of these. BTC 24K. Okay, no, Bitcoin. I mean, is it going to 23,500? Possibly. No way to know. I mean, I'm expecting lower prices, but the market may not agree with that. At this moment, Bitcoin wants to hold up. Okay, no sell signal yet, but if a sell signal shows up, I've been calling natural gas futures, but now I am trying to estimate where the price could go. Okay. I understand current events. Okay. Natural gas. I mean, energy, oil, gas, those can be seasonal markets. So, you do have that working with you, right? Based on seasonal stuff and geopolitical, but I wouldn't, I don't know. I'm not an expert in that area. I just look at the price. Okay, in order for ETH to flip to BCS to rally 100% and BTC stay the same price. Okay, all right, he's answering the other guy's question. From Athens, hey, all right, got a guy from Greece. SPX, okay. Think keeping it real, okay, no problem. Certainly don't DCA, okay, right. Guess that answers my question. I shouldn't try and chart my future. Keep reacting to what the market day brings, okay. Should we get... I'm not sure what that question means. All right, let me just go back over here. Okay, I'm spending way too much time. Yeah, wave 4. Yeah, okay. All right, so I see a question about the S&P. Since I'm pretty much, let me just answer this one real quick, then I'm going to wrap this up. I know I keep saying I'm going to wrap it up, but this time I really have to. Okay, so S&P, just like some of those stocks we looked at, right? You have this resistance area. Short-term momentum is bullish, but bigger picture hasn't changed. We also looked at the bond market, right? There's a lot of bearish potential catalysts that can bring this thing back to reality, right? Today's candle, this thing's closed now, is a bearish pin bar. We take out that low tomorrow, and this thing has a new sell signal in it in an area where a sell signal is likely to develop. On top of that, we have CPI on Wednesday. That thing comes out negative. You better believe the S&P is going to be the first one to get hammered. Okay. So again, there's no way to know how that number is going to come out. You can sit here and pretend all you want and have your opinions. Doesn't matter. The market is going to interpret that number in its own way. It's possible we have a large range expansion. It's possible that it's a non-event. If it's a non-event and the market still looks like this is bearish. There's nothing bullish about this on the bigger picture, only short term. Okay. As a swing trader and an investor, I'm not interested really too much in the short term. I'm more interested in the bigger picture because that's what's going to have the most effect, especially if I have to be in the market for longer periods of time. Okay. When you're in the market for very short periods of time, then a lot of the stuff that I talk about doesn't matter. Okay, you're only looking for momentum. It could be long, could be short, doesn't matter. You're in, you're out, and you're not exposed to all the larger magnitude of risk. Okay. All right, people. So let me see. Can you show Bitcoin short time frame? Oh no, I got to wrap this up. So yeah, let me just see here. It's amazing how they work together. Okay. Yeah. Well, again, you're just looking at market proportions and stuff like that. All right. So there's nothing magical about it. All right, you guys. So look, I got to wrap this thing up. Look, I appreciate you guys spending some time with me here today. If I missed your question, I apologize. I will be back, not next Monday, but the following. You can ask the question again there. Or you could find me somewhere in between, and I'll be happy to answer your question. Again, it's been tough for me. I have a lot of stuff going on, and I don't have much help. So, again, I have to do a lot of stuff myself. I appreciate you guys, though, and I appreciate your support. If you haven't checked out my stuff on TradingView, please do, because there's a lot of valuable information there. I share my thing there, every week. Okay. All right, you guys. So again, I apologize if I missed your question. Please just come back and ask again. I'm looking to produce more stuff, just not these streams, like I said earlier. So I need to work on that. All right, you guys. So again, thank you all. I hope you got something out of my stream. I hope you're coming away with some confidence and some better perspective on the market than when you first got here. Okay. So wherever you are in the world, thank you very much. Enjoy the rest of your day, the rest of your evening, and thank you so much for watching.